Hello everyone, this is a daily forecast on Eurodollar. Today is Wednesday, October 6th. This video is brought to you by Finteria Markets. Please check our website. You will find more information about our company, including analytical services, educational materials, and online courses. You will also find all information about trading conditions. So far, we're offering one of the best trading conditions in the market with the lowest spreads and swaps. Our spread on Eurodollar is around 0 pips. Most of the time, it's below 0.1 pip. So I'm going to start my analysis with winners and losers. This is my favorite analytical tool. It shows the strongest and the weakest currencies across different time frames, and it helps you understand which currencies dominate in the market. So first of all, we will check the tendencies over the last 24 hours. We can see that we had two strong currencies, the British pound and the Canadian dollar. And the weakest currencies were safe havens, the Japanese yen and the Swiss franc, which fell around 0.3%. So the European currency was quite stable, and the US dollar has gained just slightly. Let's also check the tendencies on the 8 hours. I think we will have slightly different situation. First of all, because we had the RBNZ decision, the central bank interest rate decision by the Central Bank of New Zealand. So this has actually affected the New Zealand dollar. And also we see some recent strength in the US dollar, not really that significant, but the tendencies over the 8 hours, they're slightly different than what we see over the last 24 hours. So let's also speak about some other events. First of all, I'm going to focus on the stock market. We actually see negative dynamics right now everywhere in Asia. So Nikkei is falling over 1%. Chinese stock market is currently closed. I think it's going to be closed during the whole week. So Korean index is falling quite sharply, around 1%. Hong Kong is also in a correction. Actually, today everything is falling, including New Zealand and Australia. So there's still some concerns and fears, and futures of S&P are also indicating that the opening is going to be lower. So this should actually provide some support to the US dollar, as it's one of the safe haven currencies, as well as to the Japanese yen and the Swiss franc. However, I would say the dynamic was the opposite, what we actually saw yesterday. This doesn't happen every time. We see a sort of a disconnect because the stock markets are falling, and usually it coincides with falling yields. But what we can see that the yields are actually increasing. So the 10-year yield on the US dollar is actually has reached its high over the last several months. So it currently stands at 1.57. So there's some disconnection between the markets. In my opinion, I would rather believe yields. So because we also see that safe haven currencies are currently falling. So they're not following the stock market, but they're following the bond market actually. And as we can see, the yields are rising globally in most of the countries. Here I have German 10-year government yield. We see a really sharp increase. And we have the same situation in New Zealand and also in Australia. So in Australia, actually, the yields are rising really sharply. So this actually has a negative correlation with the Japanese yen. So that's why we see that Japanese yen was one of the weakest currencies for the second consecutive day. Let's talk about the economic calendar. First of all, I'm going to mention the events that we had yesterday. So we had PMI releases in Europe and in the US. So in Europe, they were actually in line with expectations. Depending on the country, sometimes slightly higher or lower. So in Germany, the services PMI came at 56.2, so 0.2 points higher. So in the UK, we had services slightly, actually much better, as you can see, 55.4 instead of the expected 54.6. And also we had much better and stronger print in the US. So here's the headline, this one, 61.9 instead of 60, so almost 2 points better. And all components are also really strong. The only weak component is the employment. Probably there are, as usually, many constraints to hire more employees. So the data actually looked really good, and especially in the US, I think it's really positive. It's a really strong reading above 60. All values above 50 indicate expansion of the economy. So let's finally return back to the charts, and I'm going to review the daily chart. Nothing has changed. Once again, we broke out the daily triangle. We are below the blue line. The blue line is a critical area, and we're above the level 115, which is a pandemic support level. And here, I think that we're going to stay within this area for quite a long time. Let's switch to an hourly time frame. So yesterday we had some attempts to move higher, but there was some disappointment. Actually, one thing that I want to mention is that the market didn't move much on the services PMI, especially during the American session, because the reading was actually quite strong, but there was no any price action. So in my opinion, I always pay attention to how the market reacts to data. If we have a strong reading and the market rallies, this is a good indication. But if the market doesn't rally, this is a bit strange, and then you should question yourself what is happening, if the market is expecting anything else. So this is what we saw yesterday. We had a strong report, but the market didn't rally much. We see that euro-dollar looks a bit heavy and moving lower, but generally I wouldn't expect it to move much lower today. Possibly it will approach 1560, but even it will break it, I think the movements will be limited. The main focus of the market will be on NFP that will be released on Friday. And today we have one of sneak peeks into the report. It's the ADP employment report that will show you how the NFP will potentially look like. And on Thursday, we have job loss claims, another sneak peek. And finally, on Friday, we'll have the NFP data. So in my opinion, still the movements will be limited. We will definitely not move above 116.60. We may remain between these two areas. In my opinion, it's going to be limited by this range, and I can actually expect that potentially we can even try to actually move slightly lower, and I would rather expect a false breakout, and then the price would actually move back into the same area. So in my opinion, potentially the biggest movements will occur by the end of the week. So then I would expect much higher volatility. Still, the main scenario is downwards. So basically, we still continue to recommend short positions. If you're willing to trade, consider short positions with really tight take profits. But generally, I think the main volatility day is going to be Friday. So that's it for today. I hope you enjoyed this video. Please leave your comments and questions if you have any. And do not forget to subscribe to the channel. Thank you very much for watching, and I wish you a nice day.